Good evening and welcome. This is the big story on NDTV Profit and I'm Nupur Talwar Suri. Well, the 55th GST Council meeting threw up a mixed bag. While the Council approved GST rate cuts on essential items like fortified rice and provided concessions for defence and healthcare sectors, there were a host of decisions that were deferred. Gene therapy and advanced medical treatment has been exempted from GST. In a boost to agriculture sector, pepper and raisins sourced directly from farmers are now exempt from GST. Proposals to reduce GST rates on health and life insurance premiums were also deferred. Perhaps to take a deliberate approach on the potential revenue impacts. Now, rate rationalization that has been on the anvil for a while now was also put off. Now, the meeting threw up some controversies, including the popcorn tax and the GST on used EVs. But the criticism that the finance minister has faced on these issues seems quite over the top, particularly since the GST Council is a collaborative body that has representation from states and adopts issues with their consent. To begin with, let's go across to Shrimi Chaudhary of NDTV Profit, who essentially will be breaking down the framework of the GST Council for us. So hi Shrimi. Now Shrimi, take our viewers through the workings of the GST Council and essentially how does that add to the complexity of decision making?
Yeah, so Nupur, hi. Thank you for having me on your show. So this entire outrage on social media, which criticizing the recent move of the GST Council, which was concluded on Saturday, is somewhere putting a spotlight on not just on the the taxation part of it, and but also on the functioning of the GST Council. So decision, as we all know, that the on the different rates of popcorn, ready-to-eat popcorn rather, clarified by the GST Council between the range of 5% and 18%, depending on how it will be sold. So on that decision, people started criticizing that this is making the GST more complex and it's not serving its real intent of making the simplified regime, the basic intention of introducing the GST in 2017, which is 7 to 8 years back. Now, if you, just to understand, how this GST Council functions. So it's a constitutional body and its job is to make recommendation as far as goods and services tax are concerned. So to have a GST Council, of course, some of the rules are already laid out in the GST regime, which says that you require at least 50% of the total member should be present in the council to even have a meeting and to, take up the proposal. Out of which 75% should have a weighted votes to approve any decision. In the 75% of the voting weightage, 2/3 should come from the state members and 1/3 should come from the center. So any decision, Nupur, when it's taken up by the council and they discuss and then they supposed to reach the consensus before even making an approval or passing that particular proposal. So that consensus is very much needed to pass any decision, to approve any decision. So of course, as a council, the chairperson should be the Union Finance Minister of India, and other members are the State Finance Minister, and of course those states who wants to represent any other sort of minister, that can be also on the GST Council. But in a nutshell, that requires the voting to approve any decision, and it's clearly laid down in the regime.
All right, and to discuss more on this, let's bring in our guest. Joining us on the broadcast this evening is our Mr. Abhishek Rastogi of Rastogi Chambers, Mr. Najib Shah, he's the former CBIC chairperson, and Mr. Rajat Bose of Shardul Amarchand Mangal Das. Good evening, gentlemen, and thank you very much, all of you, for joining in. Coming to you first, Mr. Shah. Mr. Shah, how do you see the structure really of the GST Council and the complexities involved in its decision making? Do you think that they do have a large impact?
You must first appreciate the fact that GST itself came about after a long period of debate and discussion. Every single committee had recommended the need for a GST for the country. It was uniformly accepted. Now, what the GST puts in place is both the center and the state pooling their sovereignty together in the form of a GST Council. And all this required a constitutional amendment. The 101st Constitutional Amendment brought in some new articles in the Constitution, made significant changes in the Constitution. So the GST Council, as pointed out earlier, is a constitutional body. And mind you, again, the center and the states have decided to abdicate or give away the responsibilities of taxing whatever powers they had in the respective era. So the center gave away its powers of taxation on services and manufacture, which is central excise, and the states gave away the powers of services of taxation on sales. Now, this constitutional body has been, in my opinion, an unprecedented success. We have not had any such body before, which has all these state representatives there. And thanks to the fact that we had an extremely astute and patient finance minister in Mr. Arun Jaitley, the late Mr. Arun Jaitley, the initial phase of the GST Council put forth in place several critical measures. Every decision taken so far by the GST Council, and 55 meetings have taken place, have been the consensus. To put the entire blame at the door of the center for all decisions being taken by the GST Council is unfair. The GST Council itself is a body. Given the fact that it represents so many ministers, it's obviously going to have a lot of dissonance too. We have to remember that. The council, when it decides a certain issue, does so on the basis of recommendations given by a fitment committee, a law committee, which again consists of representatives of officers from the center and the states. Everybody is again represented. It is they who give the recommendations based on which the council confabulates and makes its recommendations, all of which, as I mentioned earlier, have been unanimously taken. There has never been a need for a voting, and there have been consensus. So this is how the GST Council has been going forward, and the GST itself has been progressing. Obviously, given the nature of indirect taxes, you're going to have challenges, you're going to have concerns. I think too much has been made of this caramel issue. Let me just, just talk about this. GST is a tax on value addition. Every value addition is captured and a tax is imposed, with taxes paid on the earlier products in the value chain being set off, which means in the case of popcorn, which has created so much of amusement amongst ill-informed people, it is that it's 5% if it's not branded, 12% if it's branded, and it becomes caramelized, it's 18%. It's the nature of the beast. And mind you, when you pay 18%, I get set off for whatever taxes I paid earlier in the value chain. That's how GST works. So I think the GST Council has been an unprecedented success. Yes, there is still a lot more progress to be made, but I do wish we have such constitutional bodies for all of that matters relating to center and states to address their concerns.
Yes, absolutely. It's not an easy mechanism really to work through, and that's very well pointed out by you. Let me bring in Mr. Rastogi as well. Mr. Rastogi, now the GST was introduced in 2017, and the original intention was for it to be a good and simple tax that aimed to reduce a myriad of taxes. And when I say a myriad of taxes, there were quite a few, and that has been to some extent been achieved. What is your sense on, how that good and simple tax is now going forward?
So I think a couple of fundamental aspects. First, Shrimi mentioned about fiscal federalism. So I think there is no doubt that GST Council is doing a fantastic job, and fiscal federalism is one aspect which, is at its peak, with all the federal government and the state governments coming at par. And, it was mentioned that there has not been any voting. So I think really appreciate that. But I think what fundamental aspects need to be kept in mind are, we need to now focus on broadening the tax base and moderate the tax rate. I'm not for a moment going into, this popcorn issue, which has created a lot of amusement in itself. But I think more fundamental aspects, such as seamless tax credit, are there situations which are leading to tax cascading effect? Are there issues or which need to be addressed, which are leading to inflationary gaps or inflationary pressures on certain basic necessities? I think those are the core and fundamental issues. And today, nobody is doubting the capabilities of, the GST Council, which has done tremendous job. I think it is not easy to get everybody on board. But today, what we need to see is that these fundamental principles, which were the backbone of the GST, tax cascading, broadening the tax base but moderating the tax rate, are these happening? If we talk about the erstwhile GST regime, what were the major challenges? The major challenges were with respect to the disputes related to classification and valuation. Now, let's not go into the specific examples, but are we leading with these decisions to more classification issues, more valuation issues? So the moment the rate changes with, for the same supply with certain different characteristics, popcorn has been talked about quite a bit, but there are several other situations as well wherein the classification dispute would increase if these decisions are implemented. Similarly, any decision based on valuation, I think, is not the fundamental aspect to create a distinction between the same supply when it comes to, tariff rates, etc. So I think that must be kept in mind. Very importantly, what was not announced but what came in the press release is the retrospective amendment. Now, any retrospective amendment which comes to, overcome the decision of the Supreme Court is not at all a good proposal. I mean, this is my personal view. Now, taxpayers have gone to the Supreme Court. There is an order of the Supreme Court. And if after the order, the GST Council today makes a retrospective amendment to, just overcome that Supreme Court decision, I think that is not a good sign, because now what will happen is even the retrospective amendment will be subject to the constitutional test. It will have to cross the constitutional test again. And there will be second round of litigation, especially for these block credits, when Supreme Court has already laid down the essentiality test and functionality test. So I think that must be avoided. Now, we've been talking about the frequent rate changes. I think GST Council has done a fundamentally flawless job when it comes to rate changes. They have understood the industry needs and they have been very proactive to address these rate changes, which cannot be ignored. But I think what is more important is we must have lesser frequency of rate changes, but we must today work after 7 years of GST implementation on rate rationalization. The amount of tax collected has been, increasing steadily.
Absolutely.
So there has been a growth. So rate rationalization is what must come so that inflationary pressure is addressed. A lot of this middle class income group, essential supplies, both goods and services, the rate has to come down. You cannot tax all of these services at 18%, going through and a lot of these essential things. And last but not the least are some key important decisions wherein the GST Council must address. And
Absolutely.
for instance, health and life insurance.
Yes.
Senior citizens are involved. We all have senior citizens. This health insurance policies, 18%.
Absolutely,
Medical
Mr.
insurance
Rastogi.
policies is becoming very, very expensive. And I think those are the issues which must be addressed before 31st of March, possibly in the next GST Council meeting.
Oh, yes, and there was some expectation as far as life insurance is concerned that would be brought about. But stay with us. I also want to bring in Mr. Bose into this. Mr. Bose, one of the things that has been on the anvil for a while, and there is been a bit of a concern over it, is rate rationalization. It was once again not taken up for whatever reasons. Now, what do you see as the implications of this delay essentially in rationalizing these multiple tax structures?
Well, I think it just increases the complexity, nothing much. The problem is, and there's some interesting fact, which I was just reading, is that out of the 115 countries in the world who have implemented GST, there are only 5 countries, including India, which have 4 slabs, 4 or more slabs. So, I mean, when we talk about rate rationalization, I think what the main objective should be is to bring down the rate of the slabs of the tax rates rather than, you know, increasing the or decreasing the rates on every or each goods or service. That I think does not serve the purpose. What we should strive for is perhaps merging the 5 and 12% rates into something between 7 or 8%, and the 12 and 18% somewhere between 15 and 16%, so that the number of slabs comes down. That I think is the real um, that will be actually the real advantage of rate rationalization, rather than having the same product, depending upon how that product is made or consumed, you have 2 or 3 different rates. I think that will just add to the complexity. So I guess what we need to focus on, and what the council needs to focus on, is how they can bring down the number of slabs of GST.
So, Mr. Bose, I have a question. As you rightly mentioned about that one of the important exercise is to have a rate rationalization, of course, but it's not a simple task because you must be knowing that there is a state panel, looking into examining the matter, and they somewhere not so comfortable with tinkering the existing rates, because now they are saying that the GST is very much stable. So, how you think that the council should come up with a consensus-based approach when it comes to rate rationalization?
No, you're absolutely right, Shimi. I think one of the fundamental aspects over here is that the states and center both have to be on board with the idea of reducing the number of slabs. It cannot happen if either of the state or the center is not in agreement with that. But having said so, I think the answer to that is not really classifying the same product under different rates depending upon the usage. For example, a couple of months back there was a debate on buns with cream, buns without cream having a different rate. Then there was a debate about parathas in a frozen or a packaged form as compared to parathas which are consumed fresh in a restaurant. Different rates applying. And now we have the issue of popcorn, salted, caramelized, so on and so forth. So I think this definitely is not the way to go for sure going in the future. Otherwise, this is going to lead to the same issues that we were facing in the pre-GST regime, where there were so many classification issues coming up now and then. And, this leaves a lot of scope of interpretation, and, it leaves the assessee at the mercy of the GST officers, who sort of at times, and I'm sure Abhishek will agree with that, take bizarre interpretations about a lot of things, and which unnecessarily increases the litigation costs and, cash flow issues for the companies. So I think if we really need to move towards a good and a simple tax, the first and foremost would be to figure out a way that these slabs are reduced, somehow merged, so that the states also get whatever they want in terms of the revenue share, and the pressure on inflation, as Abhishek was mentioning, that is also sort of controlled.
But as you rightly pointed out, that there should be a merger of the existing rates, which is like 4-tier structure. So, but at the same time, we are getting sense that the GST Council, or maybe the GUM, because the entire issue is with the state panel now. It's yet to be tabled, with on the GST Council. So they are somewhere in favor of having a special levy for sin goods, or maybe putting some luxurious item into 28% bracket, but they are not sort of very keen on touching the mass consumption item, the rates on the mass consumption item. So you think this strategy is helpful? And second question is, which is related on the compensation cess. As you know that the regime is ending, and somewhere the rate rationalization is connected with the compensation cess. Like what will happen to this cess after March 2026? So how are you seeing these developments,
So yes, I mean you're right on that aspect. Certain goods are taxed at a higher bracket of 28%. In fact, there were some discussions that if we were to reduce the GST rate on insurance, life and health insurance, then we need to increase GST rate on certain sin goods, for example, motor vehicles and aerated beverages, and tax it at a higher rate of probably 35% or so. And also, yes, as you rightly mentioned, compensation cess is coming to an end in 2026. So, that has to also be taken into account while determining as to how you want to rationalize the rates. Having said so, I think, as Mr. Shah was mentioning, there are various committees. There's the Fitment Committee, there's a committee which looks at the legal issues. It is really, they would have to sort of go full throttle on this exercise and see as to how, within the limited time that is available before the compensation cess is abolished, how they can sort of be more creative and ensure that the states are sort of suitably financed through the tax revenues, and at the same time the costs are kept in check so that the common man doesn't suffer. Having said so, I'm also in agreement with what Abhishek was saying, is that we need to increase the tax base. Maybe that is where the answer lies. That you increase the tax base, you try and see that how if there are certain exemptions which can be done away with and can be brought in a lower tax bracket, or even a higher tax bracket with input credit, because at times giving a lower tax rate or exemption may not really reduce the cost, because there are certain input credits which get blocked. So, probably having a look at those services or goods which are not being taxed right now, which are exempted, bring it in the tax base so that you can have you can increase the revenue on that count, whereas at the same time keeping the number of slabs at the minimum possible, so that we sort of achieve the objective of having a simpler tax regime than what it is as of now.
Okay, going across to Mr. Shah now. Mr. Shah, industry bodies have time and again spoken about ATF. Now, it's been a bit of a contentious issue. Yet again, in this 55th Council meeting, the states seem to be completely against it. Now, how do you view this? And obviously, neither is the Aviation Ministry very happy with this, nor are industry bodies. What do you think is the way forward on this? Because once again, we are seeing a conflict between the states and industry bodies on this.
Look, I personally feel all petroleum products have to come under GST. We should realize that it is used across the entire chain, and every tax paid on any of the petroleum products is a central excise tax, which is not vatable in the GST chain. So it adds to cost for everybody. The fear of loss of revenue, I think, is misplaced because it will ensure that it comes in the GST chain and ultimately reduce costs. So I think the decision not to bring in at least a low-hanging fruit like ATF or natural gas in the first instance before moving on to the other petroleum products was misconceived. It ought to have been brought in. And Madam, let me assure you, I've participated in a host of GST Council meetings. There's a lot of debate and discussions which take place. My good colleagues in this show have been talking of the multi-layer slabs. The tax administrator's dream is to have a single rate. He will be delighted if we could convince the GST Council and the states and the center to have one single rate. It'll take care of classification. I can classify the products anyway, which way I want. It'll take care of administrative problems, which challenges which we now face. So it is easier said than done. I don't think the rate rationalization, which is being spoken of, is going to happen soon. It's going to take a lot of debate and discussion and appreciation of the fact that that's the only way to go forward. I think it'll take a lot more time and effort and consensus building, and the industry also stepping forward. Every exemption which the industry acts results in the breakage of the value chain. When we started off GST, the weighted average rate was around 14 to 15%. That was the revenue neutral rate which has been discussed. Currently, we're at 11.5%. And we still want to have revenue, which has to be shared with the center and the states. Both of them are extremely concerned about the loss of revenue So these are challenges. I mean, so please appreciate the fact that the GST Council is working with huge constraints of trying to persuade disparate states with disparate interests, disparate political parties, and bring them all to a consensus is a challenge for any GST Council. And the Union Finance Minister is hard pressed, I think, in trying to bring everybody on the same page.
Yes, absolutely. So a Christmas miracle perhaps is what you're hoping for, Mr. Shah. Final word from you, coming to you, Mr. Rastogi, on this. You know, you did mention about the fact that there has been a bit of an issue as far as the controversies that have been talked about. One of them, of course, is the decision to retrospectively, the entire issue essentially of what happened with the retrospective amendment that has been made to ITC on construction services. Now, how do you think that will affect investor confidence? Because as you said, these are issues that keep going back and forth, and it doesn't really leave a very good picture.
I think it has shaken the industry, so as to say. The industry was before the Supreme Court. After several levels of litigation, there is an order of Supreme Court which predominantly, and this is a beautiful order, where fine balance has been maintained between the constitutional test and the several other tests which the Supreme Court has laid down. Now the matters could be adjudicated by the adjudicating authorities based on these fundamental tests and principles laid down by Supreme Court. Now what happens is that GST Council proposes a retrospective amendment. The Supreme Court order goes for a toss. Now there will be either second round of litigation to test this retrospectivity and whether this can happen only in rarest of rare cases and whether this is the rarest of rare case and whether it has happened, and the test will be whether it has happened to just overcome the Supreme Court decision. So I think this is a spoil sport clearly. Now, having said that, there are certain aspects which need to be considered even if the rate rationalization doesn't happen. So for instance, what happens to at least the health insurance services when these are to senior citizens? Immediately the decision can be taken. What happens to food delivery platforms? What happens when you are taxing these services of restaurant at 5%, but you're taxing the confectionaries, the cakes, chocolates, etc. at 18%? There are huge demands which are there for this sector. I think these are certain simple measures which can be taken. And I think Shrimi mentioned about the luxurious items. The basic scientific way to address the luxurious items is to see whether these luxurious items could be imported within the country or not. And if the answer is that these could be imported, then the answer is different. For instance, if you tax watches or luxury watches at a higher rate, there will be a higher probability that the person will go out and buy that, as compared to those luxury services or goods for which the import cannot happen. So I think that scientific mechanism will have to be applied, at least if you intend to tax luxury items, supplies of both goods or services at a higher rate. Do not tax those at a higher rate, which could,
I completely agree with you, Mr. Rastogi, on that one. I can see Shrimi also nodding on it, but I'm afraid we are completely out of time on the show. All three of you, thank you very much. And Shrimi, thank you to you as well for joining in. And Merry Christmas. Well, with that, it is a wrap on the big story this evening. Thank you very much to all our viewers for joining in. And from NDTV Profit and the Big Story team, Merry Christmas.